As an investor, you've been told that you can't time the market, so you probably look for the best stocks to hold for the long term. After all, billionaire investor Warren Buffett has said that when owning stocks in well-managed businesses, his favorite holding period is forever. Check out the top 10 best stocks you should own for life. 10. Johnson & Johnson. Johnson & Johnson, J&J, cracks the top 10 best stocks of the past 30 years as a three-headed giant. Alas, the corporate structure that served investors so well is coming to an end. J&J is set to split off its consumer health business, the one that makes Tylenol, Listerine, and Band-Aid, from its pharmaceutical and medical devices divisions. The breakup is meant to free the faster-growth, higher-margin parts of J&J from the drag of its more mature, less profitable operations. It remains to be seen how that works out, but the old formula of being a sprawling, defensive dividend grower, this dividend aristocrat has lifted its payout annually for nearly 60 years, was indisputably a successful one. Thanks in no small part to dividends, Johnson & Johnson's total return comes to 4,220% from 1990 to 2020 per Y-charts versus 1,950% for the S&P 500. If you were to exclude dividends from this Dow's stock performance, J&J would have gained just 2,020% over those same 30 years. 9. Samsung Electronics. Samsung Electronics, KRX 005930, has been one of the biggest beneficiaries of globalization over the past 30 years. The sprawling South Korean technology and industrial conglomerate is engaged in a vast swath of activities. It manufactures consumer electronics, semiconductors, displays, storage systems, and sundry other computer parts. The company is also a maker of major household appliances, and it designs software, provides logistics, financing, marketing, and consulting services. As much as Samsung has emerged as a major supplier to the tech sector's supply chain, consumers know it best for its ubiquitous smartphones, televisions, and home theater systems. Samsung washers, dryers, and refrigerators are likewise major brand ambassadors helping to drive top-line growth. But more than any other endeavor, shareholders can credit Samsung's success in mobile devices for cracking this list of the best stocks of the past 3 decades. Indeed, Samsung handsets are the perennial leader in global market share. 8. Meta Platforms. Facebook parent Meta Platforms, FB, got off to a rocky start when it went public under the Facebook name in May 2012 at $38 a share. Technical glitches marred the initial public offering, and the stock traded below the IPO price for more than a year. Since then, however, it has been nothing but blue skies and then some. Meta's share price has gained roughly 800% in its relatively short life, creating more than $553 billion in wealth. The S&P 500 is up about 250% on a price basis over the same span. Credit the relentless growth of digital advertising and Meta's effective duopoly with Google parent Alphabet, GOOGL, in that industry. As the world's most popular social media network, with roughly 2.9 billion global monthly active users, advertisers are happy to pay Meta to reach all those eyeballs. Indeed, no company on this list has created as much wealth as FB has in such a short period of time. 7. Walmart. It stands to reason that the world's largest retailer happens to have one of the best performing stocks over the long haul. WMT also happens to be the world's largest company by revenue. Analysts project the company's top line to surpass $600 billion before 2025. The evolution of Amazon in particular as a competitor prompted Walmart to invest heavily in its e-commerce business, and the returns from those efforts have been nothing short of astonishing. Walmart is now the second largest e-commerce retailer in the US behind Amazon, albeit a distant second. 6. Tesla. Tesla's, TSLA, annualized return towers over every other name on this list. But as much wealth as the electric vehicle maker has created in its relatively short life, it has done so with gut-wrenching volatility. You can chalk up TSLA's astounding wealth creation and roller coaster price performance to its mercurial CEO Elon Musk. The market isn't just enthralled with the superiority of Tesla's vehicles and the promise of the EV industry as a whole. It also loves Musk, even if he sometimes tweets things that make TSLA stock go nuts. Similar to the late Steve Jobs at Apple, Musk's showmanship, close identification with the company, and his evident genius is a major selling point. Known as Tesla Motors when it went public in 2010, the company adopted its current moniker in 2017 to reflect an expansion into lithium-ion batteries and solar energy. 5. Tencent. Tencent, TCEHY, the Chinese multinational technology conglomerate, has delivered an annualized dollar-weighted return of more than 48% over the past 3 decades. Investors can thank the company's sprawling operations in the world's largest consumer market for those eye-popping results. Founded in 1998, Tencent is the world's largest vendor of video games and has massive footprints in social media, music, e-commerce, payment systems, venture capital, and much, much more. A small sample of the firm's hit products include instant messaging platform Tencent QQ, multiplayer online battle arena game Honor of Kings, and QQ Music, a streaming music service. 4. Alphabet. Google parent Alphabet, GOOGL, has certainly made the most of its relatively short time as a publicly traded company. Shares of what was then known as Google, the corporate name was changed to Alphabet in 2015, were initially offered to the public less than 20 years ago. And by the end of the first trading day in 2004, the company was worth $27 billion. Today, Alphabet has a market value of about $2 trillion. The Google search engine is Alphabet's most important business, but not its only one, thus the corporate name change. Alphabet is also home to self-driving car startup Waymo, Nest Labs, a developer of gadgets for the Internet of Things, and X, which describes itself as a moonshot factory, trying to invent technologies that will make the world a radically better place. 3. Amazon.com. Amazon.com, AMZN, which began life as a modest website for book buyers, went public in 1997 and has since created nearly $1.6 trillion in value for shareholders. The stock's 31.1% annualized return is among the highest on this list. The performance is all the more remarkable considering most of the best stocks of all time goose their returns by paying out generous dividends for decades. Amazon's emergence as the nation's largest e-commerce company is only part of the story behind its extraordinary wealth creation. The firm is a giant in the fast-growing industry of cloud-based services. The latter operations comprise a vast assemblage of distribution centers as well as fleets of commercial aircraft and trucks. With its relentless focus on investment and expansion, analysts expect Amazon to continue to deliver outsized growth for the foreseeable future. 2. Microsoft. Not long ago, Microsoft's MSFT glory days looked to be behind it as sales of desktop PCs slipped into a seemingly irreversible decline amid the consumer shift to mobile technology. Although the dot-com days of the 1990s minted many a Microsoft millionaire, the aftermath of the tech bust led MSFT stock to trade mostly sideways for a decade. But the past 10 years have been nothing short of a renaissance for the software giant. Microsoft's focus on enterprise customers and, most importantly, its shift to selling cloud-based services such as Azure and Office 365 have been an astounding success. Today, Microsoft is a dominant player in cloud computing, and the stock price shows it. Shares in Microsoft, which joined the Dow in 1999 at the height of the dot-com boom, generated a total return of 57,730% from 1990 to 2020. Number 1. Apple. To say that Apple, AAPL, had a better time of it than Microsoft in the decade following the bursting of the tech bubble is quite an understatement. True, AAPL stock traded sideways for the first few years of the 21st century, but an explosion of innovation soon put an end to that. Under the visionary leadership of the late Steve Jobs, Apple essentially reinvented itself for the mobile age, launching revolutionary gadgets such as the iPod, MacBook, and iPad. But what really set Apple on its course to becoming the world's largest publicly traded company and the greatest wealth creator of the past 30 years was the 2007 debut of the iPhone. Today, Apple isn't just a purveyor of gadgets. It sells an entire ecosystem of personal consumer electronics and related devices, and it's a sticky ecosystem at that. No less in eminence than Warren Buffett has called the iPhone maker Berkshire Hathaway's third business, noting Apple fans' fantastic brand loyalty as one reason for being all in on the stock. Apple accounts for more than 40% of the value of Berkshire's equity portfolio. Do let us know in the comments which one of them you would like to buy. Thanks for watching.